Welcome to today's Ainsley News on Friday the 1st of May 2020. Today we talk about the WGC Q1 gold demand trends for 2020. Yesterday we saw the World Gold Council's quarterly demand trend come through, and as always we summarise this for you. Q1 of 2020 was a tale of one predominant impact and two disparate results. Q1 of course saw the start of the COVID-19 virus, which on one hand saw a surge in investment demand, but on the other saw jewellery demand plummet. On a net basis, it saw just 1% year-on-year growth to 1,083.8 tonne. Let's unpack the report. This is shown now in the coronavirus ignited safe haven ETF inflows but undermined consumer demand graph. Firstly, jewellery. COVID-19 induced tightening and the effects of soaring gold prices saw jewellery demand plummet 39% to only 325.8 tonne, a record low. China, the largest jewellery market, was hardest hit by lockdown measures in Q1. Demand was slashed by 65% year-on-year to 64 tonne, the lowest in 13 years. Likewise, India dropped 41% to 73.9 tonne, its lowest in 11 years during the GFC. This is shown in our tonnage reportage between India and China here. Nextly, investment. Inflows into gold-backed ETFs surged in Q1. Coin investment jumped, offsetting weaker bar demand. Global holdings of physical-backed gold ETFs and similar products jumped by 298 tonne during Q1, the highest quarterly inflows in 4 years. In value terms, assets under management, AUM, in these products increased by a record $23 billion. Over the quarter, on the back of a 10% increase in flows combined with a 6% quarterly increase in the gold price, holdings reached a new historical high of 3,185 tonne by the end of the quarter. This is now showing gold-backed ETFs in the chart here. They attracted huge inflows. Curiously, bar and coin demand saw a reverse of the East versus West dynamic in play for so long. The more coin-oriented Western market, particularly in the US, saw a surge in demand, seeing coin demand up 36% to a 3-year high of 76.9 tonne, while the Asian market, favouring bars, saw a 19% drop to 150.4 tonne. China was the main culprit, down 48% to 39.3 tonne, as it saw lockdown for most of the quarter. Encouragingly, that started to rebound on easing, but it was right at the end of the quarter and hence little impact on Q1 figures. The net result for the collective coins, bar and coin demand was a 6% drop to 227.3 tonne. It's now showing in Western investment in minted gold coins offset weaker bar demand in Asia in the following chart. Now with technology. As with jewellery, the COVID-19 lockdown impacted the technology-centric industrial use of gold as well. Overall, demand in the technology sector fell 8% year-on-year to 73.4 tonne, the lowest figure in quarterly historical series. The electronics sector recorded a fall in demand, dropping 7% year-on-year to 59 tonne. Gold used in other technology applications was 13% lower year-on-year at 11.2 tonne during the quarter, and dental demand continued its decline with a 9% year-on-year fall to just 3.2 tonne. This is shown in the technology chart just below here. And now we're talking central banks. Central bank remained net buyers of gold, with net purchases totaling 145 tonne in Q1, 8% lower year-on-year, though 9% above the 5-year quarterly average of 132.9 tonne. 6 central banks made net purchases of a tonne or more, compared with 10 over the same period last year. Russia announced that after Q1 it will suspend its gold purchases, having bought more than 1,900 tonne since 2005. As we know now in Q2, that didn't last long with their sizable recommencement in April. This is now showing the central banks buying slowed but stayed in line with longer term average level in the chart just here. Supply. Significant disruption caused by the coronavirus pandemic saw total supply fall 4% year-on-year to 1,066 tonne in Q1. This is the lowest level of quarterly gold supply since Q2 in 2013. Mine production dropped 3% year-on-year in Q1, hampered by the coronavirus pandemic. Coronavirus disruption will likely impact full-year gold supply. Despite higher prices, recycled gold fell 4% to 280 tonne in Q1. This is showing tonnage just below here in this chart as well. In Q1, provisional data indicates that mine production was 3% lower year on year at 795.8 tonne. This is the lowest level of Q1 mine production since 2015 and the largest year on year decline since Q1 2017. It also marks the 5th consecutive quarter of year on year declines. Just showing you now the COVID-19 disrupted mine production, which fell 3% year on year to a 5-year low. And that's our news for today. Thanks for joining me to Ainsley. We'll be back on Monday.